because the only thing that there are like different settings for my mic and for the desktop audio, and when I mute myself, the desktop audio still works, which is you guys. But just so we're sure. By the way, here's the link.
I'll have an eye on it.
Cool, thanks.
I'll come back in case something is up.
Okay.
I've just noticed one interesting chart. I'll share it.
Mm-hmm.
The Bitcoin sentiment volume consumed is deepest low.
Very interesting.
Ever.
That's for Telegram. If you go to Twitter, it's actually trending upwards. But yeah, good to. I actually only looked at Twitter, but interesting that Telegram is actually ridiculously low.
Yeah, that's quite different. Okay.
Yeah. So yeah, Brian, as usual, we're just gonna start with you, and then I think Max, you also wanted to share something today, right?
Yeah, I'm thinking because of special market condition.
Yes.
There are a lot of interesting things going on DeFi, MakerDAO, and I'm discovering myself all this data. So yeah, I will just share what I see.
Okay. Yeah. I'll also share just a little bit. I also found a $12 million transaction to Bitfinex that happened today. So we can talk about that a bit. But yeah.
Where did you find it? In your wallet?
In my wallet, yeah. I just woke up and
That's
I was like,
interesting.
you received $12 million
Oh, wow.
in Ethereum. And I was like, well, that's quite interesting.
Let me run the last call with my friends, and then I'm done.
Yeah. I just want to say goodbye to everyone and thanks for all the fish.
Yeah. I see. Okay. I'm happy for you.
Thank you. Brian, did you share the link with all the relevant social channels? Let me know when you do and we can start.
Yeah, I just did so.
Okay, in that case, let me start recording. I think the stream is already live. It seems so. Max Bartel has not come back to let us know that anything's wrong. So I'm just about to start. Okay, so hello everyone and welcome to another edition of This Week in Crypto. In these tumultuous times for both the crypto and traditional financial markets. So if this is your first time here, this call is a weekly panel where the Santiment team and community members get around and discuss recent crypto market events. And there's a lot of things to discuss today. But we look at it from a more of a fundamental data point of view and from a behavioral point of view rather than just looking at stats and numbers. So if you haven't used Santiment before, what we do is we develop tools and metrics, indicators, signals, and strategies by leveraging a variety of data sources. So instead of relying on pricing data, which is still very susceptible to manipulation in crypto, we use other more reliable sources of information like on-chain data, social media data, development activity data, and so forth. So we build these indicators to help you better understand the crypto market and how and why their participants behave the way they do. So if you haven't tried out Santiment before, I strongly suggest checking out santiment.net. There's a link in the description of this video. Check it out after or during the call if you like what you hear. And also consider joining our Discord. The link is also going to be in the call of in the link to this video because we talk about this stuff pretty much every day on our trading channels within Discord. So without further ado, I'm gonna leave it up to Brian. Brian, I think you're already sharing my screen, so I'm just gonna mute myself and let you talk.
Alrighty. What's up, everyone? As Dino said, it's been a pretty tumultuous time, especially over the last 2 weeks here or so. What you're all seeing right now is something I shared on our last This Week in Crypto call about 10 days ago. And this is a little update on what the correlation is looking like with searches for coronavirus or corona or virus along Telegram, Reddit, Pro Traders Chat, Discord, and also included is Twitter, even though it's not showing down there. And it's basically showing all of the total mentions over time, and is a very good indicator of just how Gust versus what the price is doing. As you guys can see, there is a very, very reflective inverted correlation here between the two. What we're seeing now is a bit of a drop off since the Black Friday Thursday, which was over 1,063 mentions in just this one block on Thursday, and there's about 4 blocks per day. So this over a 6-hour span is basically when everything was being discussed as the price was falling. So good to keep note of this, and I definitely recommend that anyone who's on Sandbase goes over to Labs Emerging Trends here, and they can check it out themselves. Just separate multiple words by or, and you can see the exact graph that I'm looking at right now. Keep in mind today, the drop here is a live look, so this isn't a complete day. So I would go with the last complete day here, which was about March 15th, where we got about 459, 515, etc. over the day. So we're still talking about it at a pretty frequent basis, but it has dropped off a bit despite coronavirus being a very relevant and still rising topic in the news and media and all other things. So to an extent, understand that the mentions kind of correlate when the prices drop, and it isn't causing the prices to drop. It's a bit of a chicken or the egg thing here. So wanted to share this. And now I want to show something else that one of our mathematicians have been working on, which is a Bitcoin versus S&P 30-day rolling correlation. And what this is indicating is that Bitcoin has been going more and more in the direction of what the S&P / general world markets have been doing, particularly over the past 2 weeks or so here in March. And basically what this means is when we're having a worldwide pandemic like we're seeing now, no market is immune to the fear that's going on, whether people's lives feel threatened right now or whether people just want to liquidate their funds in case of further downswings and it's a bit of FOMO. We're seeing very similar behavior between the markets and Bitcoin. And if you're looking for an indicator as to when things might turn around, look no further than the actual world markets, because they are probably going to be setting the pace as to when the fear eases up with coronavirus. And obviously, just from a humanitarian perspective, we're all hoping that happens soon. So we'll probably give an update to this correlation later in the week, because personally, I'm very curious as to where this is going to go next, and I'm sure some of you are too. And if we zoomed out to a 5-year span, this is actually the highest we've been in that stretch, and possibly all-time history. We don't go further back than 5 years, but when we're at an 0.6, this basically means a 1.0 is a perfect correlation, meaning Bitcoin does exactly what the S&P does. A -1 means it does the exact opposite of what the S&P does. An 0.6 is pretty massive because it's showing that just under 2/3 of the correlation with S&P is happening with Bitcoin right now. So I really wanted to stress how important this graph is, and we will be giving constant updates this week. Next up, okay, quick NVT update. I put out a Signals newsletter, which some of you may be on over the weekend, and in it I stressed the importance of taking everything going on here fundamentally and with transactions with a bit of a grain of salt, because of the fact that so much is being impacted by external events, obviously. So what we're seeing is actually some decent looking transactions going on among many different coins, but a lot of those transactions are being done in order to get out of the markets, especially on Thursday. And what we're seeing here is Bitcoin going back 3 days. That was actually our best NVT value, but that was also when the biggest FUD was happening. So a lot of the token circulation was because of the some of the biggest volatility we've seen in years, possibly since peak Bitcoin price back in January of 2018. So this one right here was the biggest as far as something that might be skewed and have a hard time justifying as a good thing because it was happening because of so much volatility. Over the last few days, though, we actually saw on Saturday a pretty good amount of token circulation as people are starting to decide whether Bitcoin's bottom is in, whether it could actually go any lower. So far today, the transactions have actually turned down a little bit, and I think part of the reason is people are waiting to see how the stock markets are going to play out. In the U.S. here, they just opened about 45 minutes ago, and so far they're trending down big time. So people are kind of playing a wait and see game right now with Bitcoin, and to an extent, the rest of the markets because of that. Looking at Ethereum, we're actually seeing
Brian,
a lot more.
Can you just for 1 sec stay on that graph? Because I expected this to happen, and I was actually looking forward to you explaining this because it's so weird, right? It's
Yep.
the first sort of bullish day since really June of 2019, based on the template. And if you
Month,
go,
yeah.
yeah, month, right? So if you actually go to sand data, you'll see. I was checking it today before the call. For Bitcoin specifically, not a lot of things are changing in terms of on-chain activity. It's just that the price is down quite a bit. Like for example, in terms of daily active addresses and a number of other metrics, like you can see. Yeah, so daily active addresses, it's pretty much the same. Like, not a lot of people are, there's not much less in terms of activity on the network than it usually is, but there is some additional activity in terms of transaction volume, I think. Yeah, there we go.
Yeah, I'm seeing especially on the 10th and 11th here,
Mm-hmm.
or I should say 11th and 12th, there was that big rise right before or during the big dip. So clearly that's when transaction volume and token circulation took off, and they both had 3-month highs.
Yeah, yeah. So but that's why Brian is saying take a look at the NVT chart with a grain of salt, because based on the model, this is a great time to buy Bitcoin, simply because I don't think the model was really taking the sort of apocalyptic scenarios into account. Basically, what NVT means is that if the price relative to the or if the market cap of a coin is too low relative to the activity on the network, then the coin is considered overvalued, or sorry,
Right.
undervalued. So currently, the price is pretty low, but the activity on the network or the amount of value being transacted on the network is still pretty high. So the model is like, oh, okay, I guess not a lot of people are really understanding exactly how much value is being transacted. Therefore, this coin is probably going to pump soon. But as
Right.
Brian mentioned, this is a very specific scenario because a lot of value currently being transacted on both the Bitcoin and Ethereum blockchains is actually going away from those coins. So basically, it's a lot of people are sending coins to exchanges, exiting the market or hedging for the foreseeable future. Like for example, if you go back to sand data real quick and scroll all the way down to exchange flow metrics for Bitcoin, you'll see this exact thing happen. So yeah, there we go. So you see this huge spike in exchange funds flow on the, what is that, the 12th, March 12th? Yeah, pretty
Yeah,
much.
this was Black Thursday here.
Yeah, pretty much
I'm sorry, this
signaling
was
sort of,
Wednesday, this was Thursday.
yeah, start of capitulation. So that's what we're saying is that yes, there's a lot of value being transacted on the network, but looking at it in a vacuum is not advisable given the general market conditions. So yeah, just
Right.
something to keep in mind.
Yeah, that sums it up well. It's something, because of the fact that so much of the transactions are happening due to people putting them on exchanges and exiting their positions. It's a mixed sort of double-edged sword when it comes to the midterm value of a lot of these coins. And when we see a chart like this where we're actually seeing some healthy looking token circulation, it's sort of a false narrative because these are very fear-based transactions. Obviously, a small percentage of them are due to savvy traders who are trying to buy this dip and expecting it to go back up. And when the price dropped all the way down to, I think 3,800 was the bottom, there were people that were actually putting their funds on exchanges in order to get more. So it goes both ways, but when we look back at something like this, it's clear that a lot of the token circulation is happening due to the pandemic that's happening, and understandably so. And the other thing I want to show, just for the future, when the NVTs start to become more relevant again, these percentages are actually really, really useful because they are showing what percentage the current NVT is indicating from the midpoint of the 4 trend lines. So there are actually 4 trend lines here. The blue one's a little hard to see, but it's right there. Green, yellow, orange, blue. It's finding the median right here, right in between the 2 middle trend lines, and measuring exactly how far away the current NVT is based on the day. So 1 day, 2 day, 3 day, and then 4 to 10 day average out. And actually what we're seeing is a lot of the altcoins are performing very well. And Bitcoin and DAI, one of the stable coins that is closely associated with Ethereum, are actually the only ones that are negative NVTs right now, or I should say positive, but the result is negative. While all the other altcoins are actually trading much more volatile. And when things start to look better, if this kind of table is giving us any indication, it's that the altcoins might be the best upside tokens when we get out of this, which is a little unexpected because you would expect, in a more healthy normal cycle like what we saw throughout 2018, 2019, usually Bitcoin is the one that recovers while all the other altcoins kind of go through the capitulation phase. In this case, it's much more polarized because this is such a unique event that's causing the markets to be suppressed, but it has a known expiration date on that suppression because eventually, as we all hope, the pandemic will pass and therefore allow markets to start trading in a more healthy manner. And right now, there's more focus on altcoins than actual Bitcoin, which I find very interesting. And really briefly, I want to show what network activity and daily active addresses are looking like. So over the past few days, beginning on the 11th, actually, which was right before Black Thursday, we actually saw a huge surge in many of these altcoins, and the amount of daily active addresses that are transacting. So this goes along well with what we just saw in NVT. There were a big uptick in coins being circulated in the markets because it was so volatile and people were trying to figure out what to do. Since that time, we're actually starting to see percentages fall off. This bold blue one is Ethereum, and most other altcoins are sort of following that same path. And we're seeing a decline in the actual amount of daily active addresses happening right now. And then looking at network growth, it's a little more mixed. We're seeing some that are going up. These are actual new addresses that are being created, which is showing that some people are opening up positions in things like this one yesterday. Elf had a much larger amount of addresses being opened compared to previously in the past week or so. And then things like basic attention token, etc. Ethereum, this is Ethereum right here. This is mostly flat. So it's something to wait and see on. And I would just sort of advise caution right now during this volatile time. That's basically the summary of everything I'm showing right now, because it's all related to what's happening with the fear related to Corona. Any questions on this?
No, no, it just sums it up pretty well. It's interesting that Ethereum's network growth is actually that low. Like even given the conditions, I would assume a higher
Mm-hmm.
spike. But yeah, just what is it, like 14% or something?
So this is actually measuring the cumulative percent changes. So
Yeah.
anytime there's more than the last day, it goes up. Anytime there's less, it goes down. So it's not that it's staying down and near 0%. It just means that since last month, over the past 30 days,
Mm-hmm.
there's only been a plus 14% change in Ethereum. Whereas something like Fetch, Fetch and ELF, a lot of these small cap tokens, ERC20 tokens, they're really spiking high.
Interesting. Yeah, I don't know what's happening with Fetch. That's like like a 500% uptick in new addresses, maybe some sort of an airdrop or something.
Yeah, it's something's going on with it. And if I looked over at NVT here, I just added FET recently. Oh, it looks like it's actually not giving data. But yeah, basically, Fetch is doing what a lot of these altcoins are doing. They are getting actually a ton of token circulation right now. Even Ethereum here is up a lot over the past few days. Almost every day over the past week has been well below the trend lines. The past 10 days have all been well below. So Ethereum and all the altcoins seem to be getting a ton of trading through this volatility, while Bitcoin is kind of being more, people are being more tentative. So interesting stuff right now. It's really tough to make logical assessments about what's going to happen next, because it's really all going to be based on these world events that are happening right now, and we have to kind of just wait and see, because when life and death is on the line, and I don't say that lightly, life and death really is on the line with this pandemic. The last thing people want to do is worry about their money tanking, and especially in crypto. People don't want to have private keys that can get lost if something happens to them. They don't want to have to leave the burden of extracting their crypto to their family members who might not know how to use crypto. So as a result, crypto has been pretty banged up, but we don't know if there's going to be further downside because of even greater fear, or if the worst part is over. And I don't want to be responsible, and none of Santiment wants to be responsible for predicting when this kind of correction over something this monumental might be done.
Yeah, and I think the chart that you showed right around the beginning, showing the sort of inflated correlation between the Bitcoin and S&P over the last, what is it, like 1 month or something. I think that's pretty much the best way that we can sum this whole current situation up. Basically, this is affecting the entire world and all of the markets. So it's not really, I think it's one of the first times that we can really see or say that crypto is being able to decouple from market events in traditional finance in terms of growth or momentum, just because it seems to be indiscriminate. This sort of pandemic seems to be indiscriminate between the crypto and financial markets as far as the impact is concerned.
Yeah, exactly. It's completely universal. There's no market that's safe from this kind of pandemic. So, got to proceed with caution, and any dip buy right now looks like a pure gamble until we hear some serious updates on virus kind of changing its impact on the world.
Have there been any additional signals triggered for our price and DAA divergence?
Thank you. I had it up actually, so I wanted to show that as well.
Oh, okay.
So we actually have over the past 2.5 weeks, we've seen 4 signals go off. Let me try and zoom in a little to really show it Okay, so let me see if I can highlight one of these bars. The 13th, they're pretty close together. Basically, 2 of the last 3 days. Yeah, all 3 of the past 3 days, and we may see another one today. They're all firing off buy signals because our daily active addresses are kind of maintaining themselves. We're still seeing lots of transactions being made.
Yeah.
But price is sinking, and as a result, these signals here are actually, I'm guessing, some of the biggest we've seen in 2 years since,
Very
by
likely.
far.
Yeah, so guys, for anyone not not familiar with this specific model or this specific template, basically what it tracks is it tracks the differences between the price of a coin and its on-chain activity. And by on-chain activity, I mean daily active addresses, or the number of addresses, unique addresses that are either sending or receiving a specific coin at any particular day. So what we have found in the past was that when there's these big divergences between price and daily active addresses, it can be they can be very potent both buy and sell signals depending on the momentum or the trend line for the 2 parameters. So for example, when the price keeps going down but the amount of activity in the network goes up, that sort of divergence has been a pretty interesting buy signal in the past, and vice versa. When we see the price kind of jolting upwards, but the amount of on-chain activity has already started to decline a bit, that often indicates a correction and therefore would trigger a red or sell signal. So basically now what we're seeing on this chart is we're seeing a price of Bitcoin tanking to oblivion, but on the other hand, as we've seen, Brian showed that just a minute ago, the amount of activity on the network in terms of daily active addresses is staying pretty much the same. So that's why this signal has triggered, is the fact that there's been this monumental event that has tanked the price down, but the actual number of addresses that are interacting with Bitcoin is still sort of staying the same. So again, similar to the NVT model, I'm not sure how well adjusted this model is for these specific types of events, because usually, it's trying to track organic dips or organic sort of divergences between price and on-chain activity in order to find opportune times to buy or sell. When something so extraordinary like this happens, yes, it's obviously going to trigger a buy signal because the price is tanking, but the amount of activity on the network is remaining the same. So it's thinking that the model is thinking that the coin is being undervalued, and rightfully so, based on its parameters. But looking at it in a vacuum, similar to many of these charts, is just not really going to do you any justice right now. I think just keep in mind that this is probably just a reaction to a very extraordinary market event rather than a outright buy or sell signal in any way.
Yeah, basically anytime daily active addresses or token circulation, transaction volume increase, but they're increasing because of volatility, it has to be taken with a grain of salt when you look at a model like this, because the transactions may be happening as a reaction to what's happening with the price and not what's causing future price swings. It's again more of a chicken or the egg, where you're seeing daily active addresses occur more frequently because of the volatility and because there could be further downside with the price. That being said, if we, for the next month, continued to see daily active addresses super high like this, and the volatility start to decrease, that's when these spikes become much more relevant.
Yep.
Because in a flat market, when daily active addresses or transaction volumes pick up, that really is valuable information because it's showing that behind the curtains, traders are trying to take advantage of the low prices and expect things to recover.
Yep, exactly.
Cool. I'll stop presenting here and leave it to Maxim and Dino to present theirs.
All right, thanks a lot, Brian. Great stuff, as usual. Max, do you want to share a bit of an insight into what's going on with DeFi at the moment? Because I think there's a lot of really interesting stuff over the last couple of days.
No, it's not only DeFi. Well, first thing, because you mentioned it, so many tokens are moving because people are selling if someone is selling, someone is buying. We should never forget it. It's not like, it's not a Fed or European Central Bank which just create money out of it, regardless if there is demand or not. In the crypto, it's very healthy, sound system, and over collateralized that if someone is selling, there is someone is buying. So keep it always in mind, and keep calm and proceed. There is no reasons for panic. I mean, there are reasons for panic, but this is a very nice time to be around because it's the first time when such a big world recession or financial system collapse happening, and there is a crypto around. In 2007, 2008, there was no crypto around. Now we have it. People who were expecting and saying that world finance is not working while people are not moving into crypto. People are not moving for crypto or haven't been moving for crypto because they were comfortable with what they had. Now they will not be comfortable anymore. Like things are getting worse and worse. And I personally believe it now. A really great time for crypto is coming. Unless our expectations that it's working not fulfilled, and it's not working. And that's why we start with DeFi and MakerDAO.
You want to share screen?
Oh, I'm not sharing screen yet. Sorry.
Nope.
Yeah. Yeah, here, it's clear.
Yep.
So, okay, the charts, there are plenty of them. Yeah, we've just rebuilt everything which we had before. Now we, for the current system of Maker. Now, maybe some of you don't know, we used to have, or people say, the most comprehensive framework or dashboards for MakerDAO. Fortunately, when they moved to multi-collateral, we had to rebuild it. Now, the way we rebuild it is actually for investors and speculators a suitable tool because we track specific parts of system. Yeah, not everything. In the last version, we had like 28 indicators or metrics. It was really like everything, but it was a lot. Now we have only 9, but this is what I'm personally using. Now, one thing, there are a lot of insights here, and it deserves like a separate topic just on this. The very first chart tell you the story, or like tell you a good story. So the blue line is the price of Ethereum, and then there is like 2 more lines, orange and also light blue. Now orange is, or let's say in light blue, it's an amount of DAI which is a hold in DSR. It's a kind of saving account in the crypto sense, where there's always rate, some rates. It was changing between 4 and 8%. Now it's again back to 4 and it will be slashed down to 0. So where you just put your money and you get something. It was one of the main value proposition of DeFi. It's a blue line. And orange is just the rest of the DAI, which is minted but used for other purposes. Now, if you see on the screen, I just noticed today there are 2 intersections. One, when the amount of DAI which is put for saving crossed up, and it's a kind of coincided with build on the top also here. And then it dropped down significantly recently, just like maybe 1 week ago, or even less, like 6 days or 5 days ago. And the rest of DAI supply is more or less the same. Or it spiked a little bit, but like stays even now the same. So it's one first interesting thing which I still need to realize what it means.
Yeah, I was gonna ask, Max, what do you think? Where's this DAI going? Because is this just a reaction to the sort of interest rates being cut, or is this sort of people moving DAI to maybe buy something?
It's both. It's both. It's both.
Okay.
I myself, as you know, we hold part of our treasury, of company treasury, in the saving account in DSR. Because as we sold it here, not far from the top. So what could I do? Of course, I just put it in DAI because it was like, for me, no brainer. Yeah, people try to chase the top. Okay, maybe grow up, but when you're on a safe side, want to safe side, say, okay, I see some risk. I put it in the 7% a year in the normal economy. That's a lot. Yeah, so I put it there. And they're still there, even though they decreased to 4%. And I will likely move it out as they are going to remove it to 0%. So this does impact, because if it's 0%, say, okay, what else can I do with it?
Yeah,
as long as I get some yield, come on, it's like also it's a quite substantial amount. So you don't just move it here and there. And we're not the only ones. There are quite some holdings there. They're big. They're like million and above.
Wow.
It's not here. I think it's another. We have another new Peter book, split between token holders in DSR. There are quite some substantial holdings there. So you don't move it. If you held 1 million votes, it's a normal reward you get there monthly.
Yeah, I assume this is people.
So this is one part.
Yeah, maybe this is people just looking into like DeFi aggregators and realizing that, oh, there are more opportunities at these other places, and given that DSR is kind of becoming less and less, viable,
exactly,
they're just moving money to other DeFi projects that could also be.
And now I will show you another chart. So I'll scroll down, and you will see what I'm trying. Okay, I need to go here back. Here there are some. This one. This is the price of DAI, and it's a very unusual. Well, it was even like $1.35. I don't know who paid. Who is this lucky guy? But it's constantly above 1. Yeah, and it by time it coincides with the moment when people are pulling out of DSR, because this is even easier money. It's an easy arbitrage. Yeah. You can convert it, I don't know, USDC, True USD, whatever you want to convert, and then wait till MakerDAO or the system balance itself. It comes down to 1. It always comes down to 1, and you come back and you get like a 5, 7, or 10% profit.
Did they
So
raise the stability fees or anything? I didn't check. Was there
decreased?
It's
decreased. Yeah, of course. So this is the last chart we have here, the stability fee and saving rates. They drop it to 4%, and actually they're voting to drop it to 0. So it will go to 0 most likely like in the next few days.
Okay.
Yeah. So when I see this first, it's relatively fast, even though there is a vote and there is you need to vote with your token, community discussion, still system reacts fast. And it's not a decision which is taken, behind the closed door. No, people are community discussing, and many eyes are looking to it, so they give feedback and say, okay, wait, maybe you don't understand this or that. I see a healthy system. And there is another parameter here which makes me collateralization ratio, and current, in the current financial system, let's see, we take this, and this, yeah. So even at the lowest level, collateralization ratio, it was here, 2.5. It means for all debt generated in the system, there is 2.5 times more collateral. What can be better?
Yeah, that's not bad.
And it's the worst time like in the system. Well, of course it can go even worse, but still it's like 2.5.
Yeah. I mean, we also have this sort of collateralization ratio segmented by different CDP holders. If you guys want to take a look at that, you can go to graphs.santiment.net and look at MakerDAO charts, our MakerDAO charts in more sort of detailed look. But this is basically showing overall. So across all CDPs, regardless of how much ETH is currently held in them, the collateralization ratio is about 2.2% at the moment. 2.2 times at the moment.
Correct. So the system, and in our fractional reserve fiat system, collateralization, I even don't know how much is it. 1, 2, 3, 4, 5%. I don't know, but definitely less than 10%. So whatever money is here circulating in the world, the real value connected to it is less than 10%.
Yep.
So good luck in the time of. That's why we see so much scratch for cash. Cash is king, because, well, professionals and big players know there is no so much value around. I need cash. This is the only real stuff. All these stocks and everything is overvalued, dramatically overvalued, in expectation of further growth. Now everything is correcting. Good. And the crypto is different. Well, crypto is affected now by, of course, this is the event, the coronavirus. Like, it's not a small one. So we are like brought together with the rest of the markets. But the debt system in crypto is a healthy one. It's over collateralized. So I see no reasons for panic. Even though, of course, it's open. Wait. I think I pressed something wrong. Okay, sorry. Oh, no, it's okay. Now, the last thing I wanted to show from this one, and by the way, BAT token could also have been used as a collateral, and it has been liquidated in a great amount. I think there was 21 million. Yeah, 21 million BAT tokens, and they were liquidated. Most of them, like 20 millions, were liquidated just in 2 days.
Wow. Okay.
Because price crash. Yeah. But you know, you got for your BT, you got your stable coins, DAI, which you can use now. Well, depends. Depends how much they minted. It always depends how much risk you took. Actually, the funny thing about MakerDAO, if you take a lot of risk at some specific point of time, even you're liquidated, you are profiting because you minted so much DAI that when the price moved so far away down, you can buy back almost everything you lose. Oh, but it depends, as I say, on many parameters. So here, yeah, these two charts is of interest for us. It's amount of debt. Let me make it comment a little bit smaller so that everything fits on the screen. Debt created, I mean, how much people either put new collateral or create new debt here. And this is how much they pay back debt. So the interesting why I say, let me take this. What? Now you will listen. When people create debt, so they hope they can make use of it, even though they pay here at the time the fee was still 8%. So if at this time you know you will have to pay 8% interest on your debt, still you're maintaining to say, okay, this is the bottom. I will find a way how to profit from it, right? Now the situation changed here when we dropped last time. Even though the interest rate now is much less, and the price actually of Ethereum is less, so you're logically you're running less risk now. They will pay less debt, and Ethereum has less way to go down. Yeah, still less people creating new debt, so they're afraid, they're scared, and as we know, it's a good sign. I mean, good sign for bottoming. Now I'm coming to this word which we are kind of looking for, but there are signs, increasing signs for bottoming up. Yeah, and wait a sec. Liquidations was severe liquidations here in this area. There were quite some liquidations in the last stop. So and you know, every liquidation it's like a push for more fear and like reluctance to do anything more. Because when you liquidate it, you stay quiet for some time. There is a growing opportunity market, I see it from this chart. Less people utilizing good conditions because they're afraid that maybe system will not work or now the bracket. I don't know what you think about it. To go to 50 or what? Or of course it can go to 50, but this is the way how you make yourself not to do any activities. And now I'm switching to another chart. As you remember, I don't know if I covered it in the last week. No, I did not because the setup was not yet there. But I mentioned, I think, in our Discord channel that the metrics, volume metrics, we've been using to spot the top and quite successfully last time. You can use it for spotting the bottom. And it was not the right time just a week ago because the trading volume was very high. But now we're getting closer or maybe already there. As you see, there is divergence. Price is pushing down. There is not so much trading volume anymore. So who is pushing this price? Not so much any sellers. The same on social volume. Yeah, of course, there were a lot of talks. There were a lot of panic and discussions in the last bottom. There are not so many talks anymore too. And you see by looking at it, it's like it's huge difference. Yeah, this is a real panic and pain. This is a real panic and pain. Here's already you're emotionally getting tired. And also the rectified as well. We need to wait, but looks like it's also the most active part was at the last bottom. Now it's decreasing. It's for Bitcoin. For Ethereum, basically the same. Trading volume, yeah, price kind of making new low or very close to trading volumes, not there yet. Social, the same. The elective addresses, top token holders, they're increasing. Yeah, they're increasing. And the last time when we were talking about the bottoms, they were decreasing. And they were decreasing before the price drop. And this time they're increasing. I think if we take transaction volume, you will see the same picture. Let me see, transaction volume, yeah. Same. It was very high at the last bottom. Now it's not so high anymore. Say if we wait, I will now change to 1 month, so it's seen even more clean here. This is a peak of conversations and recognition. We can surely make one more smaller low, and I will be happy if we make one smaller low, so we can buy cheaper. But there are growing signs of a bottom, exhaustion of the trend. We put in this way. This is a realization of the trend. You remember, I know, Dean O'Brien, there is the realization of the trend, and then very strong and not only strong, but they like all show the same picture. And now there seems to be exhaustion of the trend. Yeah. Okay, so this starting from DeFi, Bitcoin, Ethereum, and the last thing, this is the sequence I wanted to show. Long-term correlation between Bitcoin and S&P, and it's a very interesting picture by all means. Where we're now, so much correlation, we only had, actually we never had it before. What was a short one? 2018. Yeah, I think one time, was it 2018? If I take, let's say here, daily chart, or actually we need to take weekly. Just wanna take, I don't know, let's say Dow Jones. 2018, I think daily will be enough. Yeah, we had, you remember, in 2018 also stock markets crashed. I kind of crashed. Compared to what we see now, it didn't really crash, but like it decreased a lot. So in crypto decreases the time too. So the way correlated the time. Here is the interesting thing. The correlation started to increase before. And in both cases, right now, in back 2018, quite a long time before, like 3 months before, the correlation suddenly start increasing between Bitcoin or the whole crypto market and the classic finances. Yeah, and it culminated when everything crashed together. Then again, they decorrelated, and we see the same. It started correlating before we saw the crash. Actually, when Bitcoin was still increasing, it started increasing, and it now culminated. I believe it's interesting, but it's first time I'm looking into this set of data, so it definitely demands a bit more research. If whoever is listening to this recording later on, just if you're also interested in research, there are many different ways how you can backtest it or deeply. We can share the data. It's not a big secret, all this data, and can share this Python notebook. It's just you see, not so many lines. And do together research. I think it's worth researching it. There seem to be cycles when crypto market and normal economy, like you see here, correlated, not correlated, correlated, not correlated, correlated, very not correlated, again correlated, not correlated, again correlated. There seems to be cycles.
So So Maxim, from what I'm seeing, the better that Bitcoin seems to be doing, the more breakaway it has from the S&P correlation. Is that fair to say?
Yes, yes. It will break out, but then as Bitcoin is making tops, the correlation starting picking up too.
Yeah, it's interesting.
It's a kind of leading. Yeah, it looks like the risk actually. It feels like the risk or appetite for risk has moved to cryptocurrencies since 2017.
Oh yeah, totally.
It's very interesting.
It's interesting to see that when the crypto market is doing the best, the FOMO into Bitcoin and the perception of Bitcoin as more of an independent trading asset becomes more prevalent to people. And then when it's struggling, people sort of just associate its recovery with how the stock market is doing. And if the stock market is doing well, then Bitcoin's traders will be more confident in that going up over time as well, which is very interesting.
Yeah. By all means, and this data research, well, our data scientist, he explained me like in 15 or 20 minutes how to do it. So I believe anyone can get it. I got it in 20 minutes. So
yeah, we'll have
don't
to
get. Whoever watching. Yeah. No worries. Like I can explain you in like literally like in 15 minutes how to do it. It looks complicated, but it's not. So whoever was watching this video, I was even said by our data scientists that Python and this notebooks, it's a new way of doing Excel because you have much more power in your hands. And I start to believe them. You change some parameters here and there, you run some more functions, and you like get so much power. Yeah. Anyway, I think I'm finished for right now. If
Okay.
some other thoughts.
Cool. Thanks a lot, Max.
Awesome stuff.
Yep.
All right. Let me shortly go over just a few things before we end it here. And I'm gonna start with our social data because we have briefly touched upon it, but there's a few other things that I wanted to show. So let's start by looking at social volume for Bitcoin. So what you're seeing, guys, right now on this chart is basically we have our own custom data set of social media channels that we track. All of these are crypto related. So we track around more than 1,000 now crypto specific social media channels, and that includes Telegram groups, crypto subreddits, Discord channels, some professional trader chats, Twitter personalities, a lot of different sources of information. And then we compare the amount of mentions of a coin to its price over time. And currently, we're looking at the social volume for Bitcoin over the last year, and we can see that the amount of chatter around social chatter around Bitcoin has pretty much hit its almost highest level, which happened right at the 2019 top. So usually these extreme values in social volume are indicative of trend or paradigm shifts, and I think that's one of the additional reasons why Max says there are some signs that the bottom may be forming, although I would still take everything that we're currently seeing with a grain of salt. But it's worth noting that we're seeing the highest amount of crypto related activity or social activity on crypto specific social media channels around Bitcoin specifically. Now we also have these sort of experimental dashboards that we've developed where we try to actually put feelings to these messages or try to figure out whether this amount of social volume is actually positive or negative. Are people, just seeing that there's a spike in social volume doesn't tell us the whole story. What we want to know is this sort of social discussion being positive or negative? Are people moving away from the coins, or is it, or are they FOMOing it? So here, one of the things that we've developed, let's start with the Bitcoin's performance on Twitter. One of the things or charts that we've developed is this one, which basically calculates or attempts to calculate the actual sentiment of the crowd. What it does is it takes this chart, which is basically all of the messages that you see here. They are sent through our algorithm, and then they are assigned a value. Either they are positive or they are negative. So you can see the positives being in green and all of the negative messages being in red. So this particular chart, it conflates both of these, so positive and negative messages, and it kind of averages them out. So we can see whether the overall sentiment of a particular coin, in this case Bitcoin, is either positive or negative. And what we're seeing currently is different on different social media channels. So specifically on Twitter, and I'm showing Twitter first because this algorithm has been trained on Twitter data, so it's most reliable here, is that we're seeing that since the actual drop, we're seeing the sentiment toward Bitcoin actually start to veer back into the positive. Now, highly positive times or sentiment for any coin, and particularly Bitcoin, has in the past been also a red flag. So you can see here during the June and July tops, there's been this massive spike in positive sentiment toward Bitcoin. People are FOMOing in, nothing can go wrong, where my Lambos, and all that sort of stuff. And then you can see the impending corrections afterwards. Still, we're around very healthy early levels of positive sentiment towards Bitcoin, so I wouldn't say necessarily that it's indicative of any sort of market corrections impending, although we're currently experiencing one. But just something interesting to take note of. However, if we look at other channels, thanks to Gary for pointing this out, like for example, if we look at the actual sentiment towards Bitcoin on Telegram, and all of the Telegram chats that we're currently covering and tracking, this is the year low in terms of actual sentiment towards Bitcoin. So the Telegram crowd is very much flooding into the current market conditions, and does not think that Bitcoin is anywhere near recovering. Now, obviously, I think what Max would usually say in these sort of situations is that this is actually a pretty good sign for Bitcoin, because when the crowd is this negative towards a coin, it has very often been it has proven to be a positive sign, or it has given it room to grow and perform better over time. But still, just wanted to show you several sort of outlooks of the pretty much the same crowd, but on different channels as far as the Bitcoin sentiment is connected. Now,
Dino, I'm curious.
yeah.
Do you know which of these platforms hold the most weight as far as the biggest volume between Telegram,
You
Discord,
mean,
etc.?
yeah, I'm not sure. I think we can actually check that here. Let's go here. So if we look at, let's say, BTC or Bitcoin.
Oh yeah, I see what you're doing.
Yep. So
Separate it by
BTC or
platform.
Bitcoin, and then we can separate it here by different platforms, although this doesn't include all of the platforms that we're tracking. But here we can see, let's say, so 10,000 here, and on Discord 2,000 here.
Looks like Discord for sure.
Yeah, it looks like Discord is actually leading the way. So, okay, let's go back real quick and see what Discord is doing as well before I go on to a few other charts. So Bitcoin, Discord, and then last year. Okay, let's see what we get. It takes a while to load, but okay, well, looking at this chart, I'm assuming that we're going to see quite a negative value. Yep, there we go. It's pretty much the same thing. So we're seeing this big sort of negative sentiment towards Bitcoin. It started actually rising a bit, and then given the additional correction just recently over the weekend, it started going down again, currently at around -2 or 2 standard deviations, I believe is what this is calculating. So yeah, over the last year or so, this is the 1-year low in terms of negative sentiment for Bitcoin, both on Discord and Telegram. On the other hand, Twitter, as I mentioned, it's kind of either breaking even or is actually veering a bit into positive at the moment. So something to keep in mind.
Yeah, interesting.
Yeah, definitely is. And one final thing that I wanted to show about Bitcoin specifically is I was actually wondering, I was sure that when we look at the percentage of active coins, we're going to see spikes all over the place, right? Given the current conditions, I would assume that all of the different, holder categories are going to be moving their coins more than usual. So if we look at the percentage of active coins and start with the coins that have moved over the last 90 days, we can see that there's been a pretty big spike in the percentage of active coins. But this is like short term or new money, right? So people that only, or coins that have moved in the last 90 days have started, the percentage of those coins has started rising as the price started dropping. And this is something to be expected. This is weak hands and, people that are just kind of short term or swing trading or generally just gotten into money and are now panicking quite a bit. However, if we look at the longer time frames, we're not seeing that many those big of spikes. So here, if we look at the percentage of coins that were active over the last year, not that big of a spike. So basically, the Bitcoin that has moved in the last year is not really moving at a rapid or an increased pace over the last week, nor the Bitcoin that has moved over the last 3 years. Like, yeah, there's a bit of a bump here, but nothing as prominent as the the coins that have moved recently anyway. So it's also something interesting to keep in mind. And finally, let's just very briefly look at the MVRV ratio. So what MVRV ratio does is it calculates the average profit or loss of different holder categories. And here you can see, the MVRV or the average profit or loss of different Bitcoin holders. So what these timeframes show is they show the actual coins that have moved over this specific time frame. So the average profit or loss of all Bitcoin that has moved in the last 30 days or the last 10 years. So either way, what I wanted to show is that pretty much all across the board, no matter whether you just bought Bitcoin or you have bought it a while ago, pretty much all of the holder demographics are currently on average in the red. Some are almost 33%. Like if you look at the 180-day MVRV ratio, let's see where it is. It's right here. Yep. So the people or the Bitcoin that has moved within the last 180 days, the average profit or loss for those people is currently, or the average loss is 33%. So they're currently 1/3 down on their initial investment. And that's not just the 180-day MVRV ratio. It's pretty much across the board. We're seeing minuses on all of the different ratios except for the 1 day. So just the daily sort of volatility of the price. So yeah, nothing too surprising here, but still interesting to see that pretty much everybody is hurting at the moment. There's nobody, even the long-term holders that are kind of out of the blue or are not experiencing pains given the current market conditions. And finally, let's quickly take a look at some additional Ethereum charts. So we talked about miners, I think, on the last call and how they started, dumping quite aggressively into this last Ethereum rally. However, currently, we're seeing that trend stopping. So for now, and I'm curious, Max, what you think about this. What do you think? This is a good signal? I would assume you think this is actually a positive sign for Ethereum. But generally, we have seen so this is basically showing the cumulative balance of all Ethereum mining pools. So they started dumping as the price of Ethereum started rising, which is something they do quite often, and that seems sometimes to have an impact on the price, or sometimes it's actually a positive sign for Ethereum. But currently, since the drop, they have not moved their investment, and in fact, they have started accumulating their block rewards once again. So, Max, what do you make of this? At least in a short, although I assume that this is a very long-term sort of indicator, and I know so, but just curious what you think this means in the short-term sort of scenario.
Well, as I said, I don't remember if it was on this call or when we talked privately, the long-term implications that finally the miners started to dump when the price increase is good. So they have strong concern
Yeah.
for the future of Ethereum. They want to fix their profits. They don't think they can sell it more expensive. So it's a good thing. Now, if it's sometimes it can be used as a short-term signal, but for this, what we need to see now, imagine if the price of Ethereum grow like $20 or $30. So how they react? If even after such a small increase, we will see that they start dumping again, well, it's a good buy signal. It means for them, even small increase is good enough to fix the profit or to take money. So they don't believe it can grow any further. So the approach, if you want to use it as a short-term signal, is the same as always. If there is enough doubt, concern, disbelief in the market, so you say, okay, price is growing, but there is a concern. Okay, I accept it, so I go long.
Okay. Yep.
Yeah. But for this, of course, conditions, Ethereum should grow $20 or something like this, so that we can see some data.
Yeah.
At the moment, it struggles even to grow $10. But it's answering to your question. If I would be using it, this is the way how I use. Because this is how I typically use from MakerDAO. If there is a growing market, but I don't see any new CDPs created or new debt created, say, okay, interesting. So they don't want to leverage it. Good sign. And this can be used too.
Yeah. Okay. Yeah, just wanted to show one of the stakeholders into the Ethereum network and how they're reacting. So even though there's been a huge dump of Ethereum recently, the miners, at least for now, are not moving their bags. Now, that's about miners. Now let's look at the top 100 addresses for Ethereum and what they've been doing over the last week or so. So what you're seeing here, just make all of the parameters work. So what you're seeing here is you're seeing the total or the cumulative balance or the amount of Ethereum held by the top 100 Ethereum wallets. And we segregate or discriminate between the non-exchange addresses and those known exchange wallets. So here currently, or first, let's look at what the private wallets or non-exchange wallets are doing with their holdings. Basically the biggest Ethereum whale. So what have they been doing since the drop? So they're actually kind of zigzagging at the moment, and they've been zigzagging for a while now. So since the drop, they have dumped about, so it went from 27.2 million Ethereum to 26.7 million Ethereum. So yeah, they've offloaded about 500,000 Ethereum over the maybe span of 48 hours as the drop was commencing. But since they've started accumulating once again, so in the last, this is from the 13th to now, so in the last 2.5 days, they have increased their cumulative holdings by about 200,000 Ethereum. So there's been a small sort of dump among the biggest Ethereum whales over the last, during the correction. But since then, they've actually started, at least on a short-term scale, they've started accumulating once again. So this is nothing actually too out of the ordinary. Like if you look at it on a 6-month scale, you can see these ebbs and flows all the time. So there doesn't seem to be too much in terms of FUD currently materializing on the whale charts. Now, if we look at the exchanges, this is something else entirely. So, and this is not surprising at all, but basically the biggest exchange wallets holding Ethereum have had quite an influx of Ethereum over the last week or so. Let's see how it's sometime high, but let's see exactly how high it's been. So I think it's about a year high, maybe a 10-month high of Ethereum being held in the biggest exchange wallets. So something to keep in mind. Again, not too surprising at all. And then finally, one of my favorite charts in Sane Data. By the way, everything that you're seeing here is being hosted on the Santiment platform. So check out santiment.net, and all of the charts, templates, indicators that you have seen us talk about today, you can see or find on that website, santiment.net. So I wanted also to see what the biggest Ethereum transactions have been over the last 7 days, and whether we are seeing any sort of big whale capitulations. Whether there are a massive amount of Ethereum hitting exchanges, as they obviously see. One sec, let me try and bring it back up. Okay, yeah, I think we're back. Let's see. Let me check with Max Bartel real quick. Max, is the stream still live? By the way, Max, I think we've gotten a few
I know.
questions.
Max told me I will answer the question. Yeah. When
Yeah.
you're finished, I will answer the question.
Okay. Okay. I'll just briefly show what I wanted to show. So basically, and I'll wait to see. Actually, came back. Okay, good. We're still live. So anyway, I was looking at the biggest transactions of Ethereum over the last 7 days, and I came across this particular guy. And there's a few of these that I'll probably make an article about. But basically, this is the second biggest transaction of Ethereum over the last 7 days. It's 121,000 Ether, or around $13.8 million. I think it was a bit more, but now it's dropped, and it went from one private address to another private address, nothing too out of the ordinary. However, if you look at the recipient address, you will see that it then went to Bitfinex directly. So that's just in one transaction, that's almost $14 million being moved to Bitfinex. And if we look at the actual sender, we'll notice that it's been a long time holder. So it actually got into Ether just a year ago. So there's a few of these. I'm not going to go over all of them. As you can see, there's a lot of information here. If you really want to go transaction by transaction and figure out exactly what Ethereum has been, or what Ethereum whales have been doing, where they've been sending the money, and how much, you can find all of that information directly into Sandata. So that's going to conclude my sort of exposition. And before we end the stream, Max, I think there's a few questions on our chat, and I think you wanted to answer a few of them before we go.
Yeah. Thank you. It's a very good question. It sounded like, why do I think, or why do I believe the fear is over, or the realization of how serious situation is here? So, and actually, the answer will be like two parts. Because to one of them I say yes, and to others I will say no. The realization of the fact is here, at least in Europe. I see it in direction on a government level. Finally, they're doing what should be done, and as the government is actually, it takes them always some time. It's supposed to be democracy, so they have some talks here and there, but then they act. And shutting down or borders, it's in my opinion a little bit overreaction. But there is one part which is done quite properly, at least in Germany, that no social activity, all bars, restaurants, events, they're just closed. You cannot participate in anything publicly. In sport events, everything, sports studios, fitness, everything shut down. And this means they realize how serious it is, and it's one of the best way to stop it, like to slow it down, just to people don't get involved too much. So one thing regarding realization, why it's here, it is here, and before already was some small countries were shutting down the borders, but now it's like everywhere. I think this morning Germany shut down borders with Switzerland and Austria and I don't know, France and Denmark, and Poland did it with Germany before. And here we're coming to the second point where I say the fear is not yet completely Yeah. When I say I see a fear on the charts, it means a fear of speculators. Yeah, they've been experiencing very strong realization of the fear, which is typically already past the main movement of the trend. In our case, a bear trend that was like last week. We see it in many metrics, but the fear of the society is just kicking in. Speculators always acting much faster, and or let's say what you see in the speculative markets, it's a precursor or what will happen in the economy, like in the next 3 to 6 months. So markets are crashing now, and they might crash a little bit more. Like no one can exclude it. But based on all the metrics I mentioned when I was talking, it seems to be exhausting. Yeah, the market crash seems to be at least in crypto. Yeah. And if I want to analyze normal market as well, I will have to use a bit different data. But crypto seems to be exhausting. And when we reference to correlation charts, it makes me now actually think that crypto market is a forerunner of the whole market. It's always like acts the very first ones somehow. So we might bottom first in crypto, then we might bottom in the normal market, and then after 3 to 6 months, the whole world economy might be start recurring or like acting more normally. So this is the sequence of my working theory right now. And based on the data which we've gathered or we've seen on-chain activity, social activity, trading activities in crypto, to be safe, we can wait 2 more days, 2-3 more days, see if we get one more crash on higher volume. But it doesn't look like it's in it now. Yeah. I don't know if it does answer exactly the question which was raised, but I tried.
I think one additional thing that I would add to this is I think I'm still sharing my screen, right? Yes, I am. So one of the very cool dashboards that we have in Sand Data is this one called social data feed. Essentially what you can do, so basically we showed a few different social charts today, showing the spikes in Bitcoin social volume and sort of the increasingly negative sentiment toward Bitcoin on a few different channels like Discord and Telegram, and sort of a positive sentiment on Twitter and other channels. But you can actually go here to social data feed and you can enter text like, for example, Bitcoin, right? And read the actual messages that we have built these charts around, so that we have calculated and parsed from these various channels. So if you actually don't want to just look at the cumulative data and be like, oh, but what does this mean, just the spike in social volume itself might mean a few different things. What are they actually saying? You can see a lot of those messages right here. So if you're actually really interested in seeing exactly what the crowd is talking about and how they are reacting to current market events, you can just type in any word that you would like, and we show you the messages that we have collected containing that word on crypto social media over your selected time frame. It's a very powerful tool, and that's why it's only included into the premium package of Sand Data. But check it out. Just go to santiment.net and let us know if you would like a free trial for it, and we'll set you up. So if that was the only question, Max, that you wanted to address, I think we can call it a day here.
Yeah.
Yep. Okay. Well, guys, thanks a lot, everyone, for sharing today. Brian, Max, Gary, thank you a lot for all of your contributions. To everyone listening to this live or joining us, viewing a recording later on, if you liked what you saw or heard today, check out santiment.net. All of the metrics and indicators and the spreadsheet templates, different signals and strategies that we have showed today are included in the Santiment platform. You can check out app.santiment.net for Sandbase or santiment.net/sanddata for this particular part of our platform. But all of it is going to be, the best place to start is just going to our homepage and seeing everything. Oh, let me just disable my dark screen. There you go. And you can check out all of the different tools that we offer with links to our variety of products and how you can try it yourself for 14 days without paying anything. If you would like to be a more active participant into one of the future calls, let us know on our Discord. If you have any specific coins or metrics that you would like us to discuss next week. And if you also want to be a part of the discussion and actually join us on a call, let us know and we'll find just a slot for you. So until then, thank you everyone for joining us. Thank you everyone for presenting, and I'll talk to you in 7 days.
Thanks for running. Thanks for sharing, everyone.
Thank you, guys.
Thank you.
All right, let's end the stream. Thanks, guys, for joining us. Talk to you next week.